Yo, what's going on, guys? Here, let me go ahead and send this link out. Let me see. Hold up. Let me get this started right here. Okay, there it is. Okay, let me go ahead and send this link out, and then I'll get with you guys right now. There it is. Okay, and let me go ahead and put it here. All right, there it is. All right, guys, what's going on? What's going on here? Let me go ahead and open up the chat here. Hey, what's up? What's up? What's up? I see you guys in the chat. Here, let me make sure that everything looks good. And let me know if my mic is, I think it's too loud. Here, let me go ahead and put it down a little bit. All right, what's going on, guys? What's up? What's up? Okay, so today, let me see. Hey, what's up, Dylan? What's going on? What's going on? But yeah, guys, welcome. So today, it's gonna be a bit, I'm not gonna say a long class, but it's definitely gonna be very informative. I do have a handful of topics that you guys in the chat. Hey, what's up, guys? What's going on? I have a bunch of topics that you guys gave me in the chat that you guys wanted to learn. So of course, you know, whatever you guys are struggling with, feel free to ask in the chat. But for those in the Discord, you guys went ahead and told me what you guys wanted me to kind of teach today. So damn, I just saw the number spike up. What's up, guys? What's up? But yeah, okay. So today I'm gonna be covering, of course, learning when to trade and when not to trade. I'm sure you guys saw the market today. It was horrible, right? Do you take no I take my own trades, bro. But yeah, can you cover how to find fair value gaps every day? Yeah, I will. So look, today I'm gonna cover of course, learning when to trade and when not to trade with confirmations and all that stuff. You guys know today's market was horrible, right? And by the way, guys, welcome. I'm already seeing 40 of you guys in here. Damn, right? Here, let me make sure that everything looks good. Okay, so we're gonna be learning that. I'm gonna be teaching you guys exactly what confirmations to look for to find an A+ setup. I'm gonna be showing you guys, of course, when to enter, when to exit, when to get stopped out, you know, where to place your stop loss, and of course, where to take your take profit or put your take profit. How to find the perfect fair value gap. A lot of, yes, it will be options and futures based. Yeah. So with my entire strategy, you guys can use it in the stock market, futures, crypto, forex, stocks, all that stuff, right? But yeah, it kind of is options based. Yes, sir. Can you cover how to trade all-time highs and managing the risk? Yeah, I will. I can teach you that. Okay. But guys, welcome. Well, oh my God, 51 people in here. But yeah, guys, welcome up. Why not on the Discord? I'm not gonna lie, I'm trying to grow my YouTube right now. All right, let's get started. You know, too close to RP. I work more in my own Discord, 9 RPs. So you know, but yeah, all right. So 60 people in here. Damn. All right, but anyways, let's get started, right? So first, you know, of course, to start off, the first thing I'm gonna be teaching you guys is what's it called? Is knowing when to trade and when not to trade. I know a lot of you guys want to trade every single day, but realistically, I'm here to tell you guys, you know, I'm nothing but the truth. Not like that, but like you guys know, I want you guys to learn how to trade for real. You know, I don't want to sell you guys, you know, some stuff. Let me see, your mic is cutting out. Let me see. Let me make sure that everything looks good here. All right, let me know. Let me know if it's good now, or if it's too loud. Let me see. Let me see. Hold up. It should be better here. There it is. Okay. But yeah, I want you guys to pretty much learn everything about trading the real. Still cutting out? No way. Good. Can this session be recorded? Yeah, it will be recorded. Yeah. Damn, 97 people. Guys, welcome. But yeah, cuts in and out. Still cutting. Okay, hold on. Let me go ahead and check. Let me check here. Hold on. Hold on. Give me a second. I can hear okay. Okay, bet. One sec. All right. Now it should work. It should work better now. Let me know. I can hear well. Okay. So, all right, guys. Let me know if it's fixed. Let me see. Let me see. I'm pretty sure it's fixed now. So, no. Now there's an echo. Still cutting. Okay, well, I'm gonna switch my mic. Give me a second. Give me a second. Let me see here. Hold on. All right, now it should be. Let me see. All right, there you go. Now it should be better. I'm gonna go ahead and use my headphones. Hopefully this one's better. Let me know. What is NQ 2024? It's 2024, right? Talk. Let me see. I think they're trolling at this point, bro. I hope not, bro. Yeah. Let me go ahead and hear myself. All right. Yeah, it sounds way better now. Okay. Perfect. 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 Okay. So guys, pretty much what I'm gonna show you guys is how to like pretty much learn when to trade and when not to trade. Right, W Mike. Hey, bro, this is the one that I play games with. But okay, so you guys might already know that today's market was extremely choppy, and I literally did not what's it called? I literally didn't trade this at all today. I completely avoided trading this because it was extremely choppy, just not worth trading. So how did I know not to trade this? Well, simply if we let me see if we go back just like this on the, let's see, like right here, right? So right off open on the 5 minute time frame, you guys can pretty much see that there's no trend in the market, right? It's constant, very indecisive candles, it's constant chop, and there's really nothing going on here, right? So guys, if you guys don't see your confirmations, so what are your confirmations to start off with, right? So first of all, before you guys take any sort of trade, you guys need to know what the market trend is. Is it bullish or is it bearish? Still cutting? Let me see. Nah, it's not cutting. It's not cutting. All right. But yeah, you guys need to make sure that to know if the market trend is bullish or bearish. If it's not bullish or bearish and it's just very choppy, simply don't trade this. It's not that hard, right? If there's nothing going on, if the market is not showing you that's going to go higher or go lower, it's really, why you're going to force out a trade, right? Let me see. Hold on. Okay, yeah. But yeah, no, there was no trend today, right? So pretty much, let me see. I'm not. Let me see. It's not cutting. Okay, okay, okay. Okay, but yeah, no. Literally today there was no trend. You guys can see all day the market was just trading in some sort of range. Of course, when we're trading in a range, I never trade this. I'm more of a breakout trader, more of a breakout with a retest type of trader, right? So if nothing ended up breaking out today and no massive movement started, pretty much happened today, I just didn't take it, right? There was just nothing to take here. So right off open, I told everyone, I'm like, guys, please don't trade this right now. There's nothing really going on. There's a lot of buying, there's a lot of selling, to the point where the market is very indecisive, right? If the market's indecisive, of course, why would you trade this? There's just nothing to trade here, right? So how does a good market to trade look like? Well, here, let me give you guys a good example. And I saw someone in the chat asking about all-time highs, so I'm gonna give you guys the example with the all-time highs here, right? So in this case, we're going to be using this example right here. Right, so here, let me go ahead and replay this back so I can show you guys exactly what type of market you guys should be trading, right? So in this case, right here, you guys can see that right off open. This was Friday's market. You guys can see that right off open. Yeah, sure, the trend on the smaller time frame at least looked pretty bullish, right? So it looks pretty good here, right? To the point where you know what the market will do. So I'm pretty sure you guys remember on Friday how I told you that, yeah, I told everyone that I'm looking for all-time high to get swept up here. So I'm basically looking for a break above this. How did I know the market was going to break above this? Well, simply because I knew what the trend was, right? If you kind of zoom out here, you guys can see that, yeah, we had a lot of buying power coming in here, and out of nowhere, of course, the trend became really bullish. A lot of buying started coming in, getting stronger and stronger as time went on. So I knew, of course, if buyers are coming in very strong, we're going to take out all-time high pretty easily here, right? So once we went ahead and took out all-time high, pretty much my model to trading all-time highs, right? So let me show you guys, right? And I'm kind of gonna draw it out because it's really easy to draw out and really easy to understand here. And I trade this every single time, and I'm gonna say it has a pretty high win rate, right? Because I win a good amount of times by trading it. So what we're gonna do here, right, is just say that the market has an all-time high level up here, right? So let's say green background, green. Okay, so let's say that this candle right here is going to be the highest point that NQ has ever gone to, which is going to be the all-time high level, right? The highest point it's gone to. So this is going to be ATH. This level is going to be known as ATH, right? So we have all-time high, right? So you guys know that I'm more of a drawn liquidity and liquidity type of trader, right? I trade based off where the liquidity is lying in the market. So what ends up happening here is, of course, when the market creates an all-time high and it rejects right back down, of course, people are going to be like, well, we're overbought, or, the market is way too high up, we got to dump eventually. So a lot of people are going to start entering shorts, right? It could be puts, shorts, sells, whatever the case, whatever market you guys are trading, people are going to be entering shorts, right? So when people start entering shorts and the market starts dumping from here, what ends up happening is, of course, they're going to be entering shorts and they're going to be placing their stop loss at where the market rejected from. Where's this going to be at? Well, simply it's going to be at all-time high, right? So what ends up happening here is a lot of a lot of stop losses and a lot of orders are waiting to be filled up here. So what ends up happening here is when the market goes ahead and it retests all-time high again, which is going to look just like this, what the market is pretty much doing is it's stopping everyone out that went into shorts, and of course it's pretty much sweeping liquidity. Now, if I ask you guys, how many times have you guys placed a stop loss in the market, it hit it exactly, and then it went your way? Why? Because you place your stop loss at a very popular level. It's pretty much the level that everyone else is placing their stop loss, right? And you guys know when you guys place your stop loss, you're pretty much just leaving an open order in the market, that if the market goes above this level, of course, you're selling your contracts to someone else, right? Because where there's a seller, there's a buyer, right? And most times, where my concept kind of aligns here is the concept is that banks, institutions, the algorithm, they can all read where your stop losses are placed, right? So when there's a high liquidity pool, such as this all-time high for this example right here, right? What ends up happening is, of course, since there's so many orders here, the market will go ahead and take this level out, right? Stop all of you guys out, and when you guys are selling it, there's a concept that you guys sell it to the algorithm. Once the algorithm fills all these orders and, of course, buys it at the complete top, then it goes right back down, which means this was a liquidity sweep. So how do you trade this? Well, in this case, for example, I saw someone in here asking about the fair value gap with my strategy. So let's say, for example, we set all-time highs, and of course we went ahead and swept all-time highs in this candle, which pretty much means that we stopped everyone out in this level. So pretty much what we're looking for here is a simple selling candle. Once we get this selling candle, then that is our cue to go ahead and enter shorts or puts or sells, depending on what you're trading, right? This works for options. Once again, it works for options, futures, crypto, forex, stocks, everything, right? Because you're pretty much just reading liquidity, right? So once again here, all-time highs, a lot of retail traders like us are placing our stop loss at the highest point where the market went to. Then, of course, the market takes out this level, which ended up happening right here, right? In this case, a real-time example on what I took on Friday. You guys can see that right here, the market set all-time highs, which is the highest point the market went to in this level, right? And then what ended up happening after? Well, we went ahead and took out all-time highs, we stopped everyone out, and then we got the selling candle. So how do you trade this? Which is the main question here. So in this case, let's say a lot of buying came in and we took out all-time high and we created this fair value gap, right? So what you're gonna do here is you're simply just gonna wait for this candle to go ahead and close and create this gap like this, right? So in this case right here, we have this fair value gap. So it's gonna look like this, and then of course the midpoint, which is gonna be around here, right? So I'm gonna go ahead and put this as like a dotted line, for example, right? So the midpoint, just like that, right? So now we have this fair value gap. So what are we looking for here? Well, simply what we're looking for is, of course, a market structure shift to happen. You guys know I trade based off DOL and MSS. For those that don't know what DOL is, it's pretty much drawn liquidity. So it pretty much just means, like the market swept liquidity, and what market structure shift means, or MSS, it pretty much means that the market structure is shifting from being bullish to being bearish, right? What makes that a fair value gap? Simply because, okay, I don't know if you've watched my fair value gap video, but pretty much what a fair value gap is when there's a bunch of volume in one candle, and there's just a really nice gap to be filled there. It's pretty much known as an imbalance gap, also known as a fair value gap, right? But if you don't understand that, of course, I didn't explain the best right now. But if you do want to kind of learn more about it, just click on my channel, and then the video, I have multiple videos on fair value gaps. There's no strings attached. It's very easy to understand, and it's all there. Do I only trade futures? Pretty much, yeah. Futures is my go-to. I pretty much make a living off trading futures. So yeah. But anyways, when the market creates this fair value gap right here, pretty much what we're looking for is a simple market structure shift first. Pretty much meaning that we want to see a lot of sellers come in and flip the trend from being bullish to being bearish, right? So in this case, what we're pretty much looking for is a simple selling candle to come in right here. Once we get this selling candle, instead of us looking for a bounce off this fair value gap, which was one of the topics that I wanted to kind of show you guys. Instead of looking for a bounce off this fair value gap and going higher, the reason we're not going to be taking this
longs off this fair value gap is because the market already took out liquidity. There's no reason for the market to go any higher. You know what I mean? Is there a difference between break of structure and MSS? Yeah, there's a complete difference. Break of structure is more of a breakout, and MSS is more of a reversal. My bad. You made 170. My bad. Hold on. And good stuff, boy. Good stuff. So pretty much in this case, what are we looking for here? Well, we're not going to be looking for a bounce here. Why? Because the market already took out drawn liquidity. So the market has no reason to go any higher. Why? Because there's no liquidity above. We already took it out at the highest point that the market has ever gone to, right? So there's no point in going longs here. So what we're going to be looking for is, first of all, once again, an MSS to play out. Once we get this MSS to play out and the market structure starts going from being bullish to being bearish, we're going to start looking for shorts here, right? It's very, very simple. So simply once you start seeing the selling coming in, all you're going to be looking for is a simple inverse fair value gap. That's it. Right, so what is an inverse fair value gap? For those that don't know, it's the same thing as a fair value gap, but you're just going to be looking to take shorts once we break right below the fair value gap. So you'll be looking to take shorts around this break right here. So in a real life example, which I actually ended up taking with my entire community live trading on Friday, you guys can see that right here. We have all-time high, so I'm going to go ahead and mark this out as ATH. Right? Let me turn this off. So once we mark out all-time high, you guys can see that yeah, we ended up breaking above and we swept liquidity. So what do we do from here? Well, you want to go ahead and try to find a fair value gap. Where's the fair value gap right here? Well, it's actually going to be this gap right here in the market, right? So what you're going to do is you're going to go ahead and mark it out just like this. Let me go ahead and fix this real quick. Middle line, background, white, center, right? Okay, so now you have your fair value gap right here. So simply all you're looking for is a simple break below this candle. Once you get this break below this candle, you're just going to enter shorts and target drawn liquidity to the downside. Where's drawn liquidity going to be at? Well, you have your first level. You have your first level right here where the market actually bounced from. Here, let me go ahead and fix this real quick. Okay, so you're pretty much, and I'm going to cover how you guys can find drawn liquidity. It's super, super easy, and I'm going to pretty much break it down to like as good as I can, right? So for those that do know how to find drawn liquidity, we have 3 levels of liquidity here. So we have where the market bounced from the the lowest point. We have this really nice bounce, and we have this one, right? So you're gonna, when you guys enter, you're pretty much just gonna be looking to enter just like this off the break and targeting these 3 levels, right? This is how I trade every single time. There's no strings attached. It's extremely easy. Now, I kind of want to. I feel like I'm going too fast, especially for the people that are new to trading and with my strategy. So I'm gonna break down exactly how you guys can find drawn liquidity and how to play around it, right? And it's super, super easy. So you guys do know that the market pretty much plays around an entire trend, right? It's either bullish, bearish, or just not moving at all. Yeah, I mean, yeah. Every class I do have to explain it, but I mean, there's new people, so just so everyone learns, and it's more practice for you as well, right? So we really can't complain. But anyways, in this case, right? Let's say that the market is in a bullish trend or bearish trend. For this example, I'm using a bullish trend, right? Of course, you guys know that the market is not going to be going up forever. The market consists of buying and selling every single day. Some days are going to be red, some days are going to be green, and some days it's just not going to move. Can we learn from you if we trade options? Yeah, you can. Like I said, it works for any market. Yeah. But okay, in this case, right? Let's say that we're gonna be let's say that the market is in the current uptrend, right? So what are you gonna be looking for when the market is in an uptrend to know exactly where? Let me see. David's brain moves faster than his mouth. It's so funny, bro. But real stuff here. So pretty much what ends up happening here is, let's say the market is in an uptrend. Of course, we're not going to be going only up. We're going to be going up, pull back up, right? That's pretty much how an uptrend works, right? So what we're going to be looking at here is a simple drawn liquidity just like that. This is how a bullish market moves, right? Of course, it's a lot cleaner than this, but just for the sake of the example. So in simple terms, the easiest way to find drawn liquidity is in an uptrend. Of course, you're going to be looking for liquidity to the downside. So where is that going to be at? Well, simply it's going to be where the market is bouncing from. So let's say in this example right here, right? So we have the swing low, which is going to be this low right here. This is going to be known as the main low. So you're going to go ahead and mark this out as the main low, which is going to be drawn liquidity, right? So main low, DOL, right? That's simple. Your next low is going to be the higher low. You guys know in an uptrend, it's higher highs and higher lows. In a downtrend, it's going to be lower lows and lower highs. It's that simple, right? So in this case, we have the main low, which is going to be, of course, the swing low. We're going to have the higher low. Pretty much, I mean, it's in the name. You guys know what I mean. It's pretty much a low that's higher than the previous one, and it's just rinse and repeat, right? So we're gonna have a higher low since we are in a current uptrend. This is gonna be drawn liquidity, right? And I'm gonna explain to you guys exactly why this is drawn liquidity and how you guys can find it, right? Well, I mean, this is pretty much how you guys find it. You guys just mark out every low that the market bounced from, right? But why is this drawn liquidity? Well, the reason why this is drawn liquidity is simply because, okay, when the market is in an uptrend, of course, you guys can easily identify that the market is going up. So what are you going to be looking for? Simply, you're going to be looking for either calls for options or longs for futures, right? Or buys for forex if you guys are trading forex, right? So what ends up happening is when you guys go into these longs, calls, or buys, you guys are going to be placing your stop loss at the most recent point where the market would bounce from. Why? Because of course, if the market goes against you, you want to get stopped out at where buyers kind of were holding the level up the most, right? So if they can't hold up the level anymore, it's just a good sign that sellers are gonna step in, right? So what ends up happening here is, let's say for example, we know that the trend is bullish because we have, of course, the market is constantly creating higher lows and higher highs, right? So we have the main high and we have a new high up here, right? So we're going to be entering longs around this range because we know that the market is going to be going up, right? So what we're going to do here is we're going to enter a long position here. Now, where would you place your stop loss? Well, simply where the market most recently rejected from. It just makes the most sense, right? So you're going to be placing your stop loss right here. Now, the reason why this is drawn liquidity is because, keep in mind, there are millions and millions and trillions of dollars in the market. So, of course, there's going to be a lot of traders like you that will place the same stop loss. So what ends up happening is, of course, there's a lot of stop losses, a lot of money waiting to be filled at this level, right? So this creates drawn liquidity. Now, if the market continues going higher, right, a lot of people will either hold their longs or just completely forget about their stop loss, right? So what ends up happening is a lot of money is lying on all of these levels, right? So what the market does is, of course, it's not going to be going up forever. So when the market goes down, let's say you're going to go ahead and enter shorts. How are you going to have your pretty much your price targets? Well, you're going to have your price targets by targeting these lows down here. So every single low that the market created is a level of liquidity. So in this case, we have one here, one here, one here, and of course one here. Right now, of course, I could be showing you guys, it's a really good example or whatever, but how do you find this real time? Let me see. Let's say that price reaches drawn liquidity. Do we then wait for a bounce and then a bullish for rally gap? No, I mean it really depends, right? So in this case, let me show you. So let me bring it right back down into here, right? So let's say for this example that we have drawn liquidity right here and the market has yet to take it out, right? So it's gonna look something like this. We have drawn liquidity, and we have this, right? So what ends up happening is, of course, the market finds a high. The market is in a current downtrend, and the highest point the market has gone to is this drawn liquidity level, right? So what can you do here? Well, there's two things that you can play this. Either you can play a fair value gap with a continuation, or you can play a complete inverse once we take out drawn liquidity. So how would this look like? Well, for example, let's say that the market, we know that the market trend is bullish, right? But the market has yet to take out drawn liquidity. So that means that we have room to go higher, at least into this level, right? Maybe we have some levels above or anything, but for this example, this is the only level of liquidity that we have nearby, right? So in this case, what we're going to be doing here is, of course, let's say, for example, we have some sort of fair value gap that got created like this, right? We have the fair value gap, and we have not yet to touch this level. So it's going to look something like this, right? So we do know that the market has a bit more room to go higher, but out of nowhere, the market just ends up rejecting, right? Before we even hit drawn liquidity. So it's going to look like this. But it doesn't mean that the market is going to go down just because it's selling off. What this means is it's pretty much just going to be a simple retest. Like I said, in a bullish trend, the market is going to be going up, but not only going up. It's going to be going up, pulling back, going up, pulling lower, going up, pulling lower. So what this is going to do right here is, of course, we're going to be retracing into this fair value gap, this bullish one, right? And we pretty much know that the market is going to bounce based off this fair value gap because, first of all, the trend is bullish and we have not yet taken out liquidity to the point where the market wants to go lower. We still have room to go higher and those orders want to get filled. So what you could do here is, if the market has not, keep this in mind and write this, if you guys are taking notes, write this down. If the market has not taken drawn liquidity out, it still has room to go higher or it still has room to go lower depending on what the trend is. In this case, it's an uptrend, right? So what we're going to be looking for here is we're going to be looking for a simple fair value gap bounce off the midpoint, which will look somewhat like this, right? We go into the midpoint and buyers start taking control again, right? Once you start seeing that buyers are taking control, like the candle is looking like, of course, a lot of buyers are stepping in, that is your cue to go ahead and enter longs just like this. So you're going to go ahead and place your longs right here. Once you get the confirmed bounce right there, you're going to place your stop loss at a nearby low. It could be right here, or it could be at the bottom of the fair value gap. It's really up to you guys depending on how much you guys want to risk. And simply what you're going to do is you're going to set your price target at the drawn liquidity, right? So for those that are in my premium, for those that are in my Discord, you guys know that we are pretty consistent with our alerts. Why? Because we're trading this exact model. As long as you guys know where drawn liquidity is and what the trend is, playing these, pretty much trading this market is not as hard as it seems, right? I would say we're pretty consistent with it, right? I'm not trying to sound like a high ego or whatever, but it's pretty much the truth. You guys see the wins, right? So what ends up happening here is, since we have not taken out drawn liquidity right here, what we're going to do is, of course, enter longs right when we see a lot of buying coming in, and we're pretty much just going to target this as our price target, right? So you guys are going to be using drawn liquidity as your price target, right? And let me know in the chat if this example made sense, so I can go ahead and move on to my inverse fair value gap thing. So just let me know in the chat. So this is going to be drawn liquidity plus price target, and just like that, it is a nice winning trade right here, right? So let me see. So when it reaches one of those lines, doesn't mean let me see. When it reaches one of those lines, does that mean that's when we sell some of our contracts? Oh, okay. So when it hits drawn liquidity, yeah. Okay, yeah. I got that confused a little bit. Makes sense, but I'm slow. You're good, bro. But yeah, style. So pretty much when it hits your drawn liquidity, that is one of your. Okay, you can have one price target or multiple price targets, right? Because keep in mind, there could be drawn liquidity above. So let's say, for example, we have more drawn liquidity above, just like this. So we have one up here, for example, and we just have one here. So what you could do here, bro, teaching the money glitch for free, bro. I'm telling you, try this out and let me know how it goes. I can pretty much not guarantee, but I can like say with confidence that if you put your time into it, bro, it can work, right? But still, anyways, let's say for example you have two price targets, right? And let's say you have 6 contracts, right? So you enter this trade off this fair value gap with 6 contracts, right? And here's your TP1. What you could do here is you can go ahead and sell half of your contracts, which is 3, take some profits out of the table. Of course, you can always move your stop loss to break even just like this, and you can set your other 3 contracts to go ahead and sell at the next drawn liquidity if the market trend is really strong. Now, if you only have one drawn liquidity, then I would pretty much suggest to just take full profits at that level, since it did hit your price target. Here, let me see. Yeah, but there are 2 types of liquidity, internal and external. It can get an external. Yeah, exactly. So that's why I say, if it does hit your price target or drawn liquidity, same thing. Always pretty much make sure that you guys take some prop. Don't get greedy, right? The one you guys know, I always tell you, do not get greedy when you guys are trading these markets, because it will mess you up, right? When it hits your price target, that is you guys had your price target for a reason, right? Let me see. I think this chart, you're making this come out, bro. For real? Bro, I have not been on the market. Not that I haven't been on the market. It's just been very slow today, so I haven't really been focusing on it. But yeah, just like, let me see. SW trading, exactly. Just like how you said, when we hit drawn liquidity or your price target, same thing. You guys need to make sure that you guys take some profit, if not all profits, right? And when you guys take some of your profits at your first take profit, and you have another one, make sure that you move your stop loss from the red where you had it at. Let's say you had it at the bottom of the stop loss. Make sure you move it from red to break even. So if the trade does go against you, right, you're going to be selling for 0, right? Or 0 on your remaining contracts, meaning that you're still going to be green on the day, even though the trade went against you, right? And then of course you can set your next price target right here. Now, I do have another model. Wait, let me see. Is it just me, or is the market shit in the summertime? Honestly, I don't really think the season really matters that much. It's just, market conditions, the economy. It's really much the news that moves the market, right? So it all depends on that. But there's no guarantee that summer will always be a good market. You know what I mean? But yeah, it all depends on what the the economy is doing, right? But anyways. Now, what is my next model that I pretty much trade I have 2 models, the fair value gap model and the inverse fair value gap model. My drawn liquidity does not change. My MSS model does not change. I only change the fair value gap and inverse fair value gap, right? So what I tell you guys right now, this is known as your FVG, right? So the regular fair value gap. This is my fair value gap model. So if you guys want to go ahead and screenshot this, feel free to, or if you guys want to rewatch the recording, it's going to be my channel. Just like this is how I trade it. Can an election affect the market, bro? Like crazy, yeah. So expect. I'm pretty sure it's in November. It will definitely move a lot. Like there's gonna be a lot more volume. So yeah, it definitely can, for sure. But anyways. Now, let's say for example, instead of the market not hitting drawn liquidity before you enter your longs, let's say in this example it actually ended up hitting drawn liquidity before anything, right? So let's say for example right here. So yeah, we have the here we have the fair value gap. It's going to be the same fair value gap, but in this case, let me delete this. In this case, instead of us looking for a retracement from this fair value gap and looking for a bounce right back up, the reason this bounce won't really work as good as if we never hit drawn liquidity is because the market already swept and took out these levels of liquidity, right? You guys can see right here, we have the candle right here, and we went ahead and took out this level of liquidity. But you guys might also see that we never ended up, let me see right here, we never ended up going into this fair value gap until right after we swept liquidity. So what can we take from this case? Well, if the market, since your price target already got hit and all of the liquidity already got taken out, then there's no point of the market going back into this bullish fair value gap and going right back up to the upside. Why? Because we already took out the drawn liquidity. There's no reason for the market to go back up. So when this ends up happening, right, right here, since we already took out liquidity, what you're going to be looking for is a simple inverse fair value gap. So instead of looking for a bounce off the midpoint, right here, you're going to be looking for a simple rejection from this fair value gap, right? So once we go ahead and close right below this gap right here, you're going to start looking for shorts. It's that simple, right? I promise you guys, there's no strings attached. I'm not hiding anything. This is exactly what I trade on a day-to-day basis every single day. Either a fair value gap bounce if, we have not taken out liquidity, but if we did take out liquidity, you're going to be looking for a fair value gap inverse. Now, when you enter your shorts, where are you going to be placing your take profit? Well, of course, when the market is going up, we're going to be creating drawn liquidity. When the market is going down, we're going to be making drawn liquidity, right? There's going to be liquidity everywhere because everyone is placing their stop loss at a certain level, right? So in this case, since we already took out all the stop losses in this level, right? Of course, now we have room to go lower as there is a, there is a drawn liquidity right here, right? As the market found this bottom and it bounced right back up, of course, those that are entering longs, they're going to go ahead and place your stop loss right here, right? So what is this going to be known as? Well, simply it's going to be known as drawn liquidity, DOL, right? Here, let me go ahead and put this like this. So now, since we already took out the drawn liquidity to the upside, we want to be targeting the valid drawn liquidity to the downside, right? So when you guys go ahead and enter your shorts below the fair value gap, as it's going to be an inverse fair value gap, right? You can go ahead and place your stop loss at the top of the fair value gap, just like that, and your take profit at the drawn liquidity. Now you're looking at about a 1 to 2 risk to reward, which is I'm not gonna say it's amazing, but it's really good, right? Anything more than 1 to 2 is beautiful. So in this case, what you're gonna be looking for here is a simple inverse. Once you enter right here, you're pretty much just gonna be looking to take profit at the drawn liquidity, which will look just like this. Boom. That's how you get the trade. Now let me catch up with the thing. Is this all-time high or in general? No, this is in general. This is in general. How did you learn? Did you have any mentors? I'm not gonna lie, I had no mentors. I kind of learned pretty much to myself. I've never really paid for a course. I've never paid for a mentorship. I never really relied off YouTube videos. It's all about screen time, and of course, having a mentor does help because it does save you a lot more time, a lot more money, a lot more mistakes. So you can get all that out of the way when you are starting off. Can you post this after? Because I joined late. Yeah, it'll be recorded in my channel. But anyways, how does a real life example look when you guys are looking at a model that looks like this? Well, let me go ahead and show you guys. So here, let me go ahead and pull up my Discord real quick, and try to find a good alert here. 1 second. Let me go ahead and see. And let me try to find something and I'll show you guys all the alerts here. So here, let me go ahead and screen share my entire thing so you guys can see my entire monitor. It should be this one. Okay, there you go. So now you guys can see pretty much my Discord here. So what am I going to show you guys? Well, let me see. Okay, so right now what I'm going to show you guys is a simple inverse fair value gap model. And I'm going to show you guys exactly how I found this, what I looked for it, and pretty much how you guys can do the same exact thing on how I found it and how I entered it. Right, so here, let me go ahead and look at the commentary channel. This was on this 27th. Let me see, 27, right here. So pretty much what I told everyone is looking at NQ coming into market open, NQ has been going crazy during the first 10 minutes of market open. Right, so in this case, what can we take from this? Well, the market trend is extremely bullish here. So it looks really, really strong. You guys can see we have a ton of buying coming in. Right, and let me see if I can put, yeah, there you go. Let me see if I can zoom in here. Okay, like just like that. So you guys can see that, yeah, the market trend is extremely bullish here. It looks really, really strong. But what can you guys take from this? Well, we actually ended up taking drawn liquidity out at 20,098, and we never retraced into this bullish fair value gap to get that long entry. But the market already took out drawn liquidity. So what are we looking for here? Simply what we're looking for is, since buyers are extremely strong in this case, right? What we're going to be looking for is a simple sweep from this level, followed up with a lot of selling coming in. Once we get that selling to come in, what we're going to be looking for is a simple inverse from this fair value gap to target drawn liquidity down here and down here. Right now, you guys have the game plan, right? And I literally put this out before the trade ended up playing out, and I told everyone now that now after the highest drawn liquidity got taken out and swept, sellers are starting to step in, right? And this was real time, right? So what I told everyone here is, now that NQ is, of course, it will stop hunting this drawn liquidity, and after it swept all of them, it's now looking to form an MSS and shoot back down. And I said this before the market even played out, right? Because I already knew what was going to happen, right? We took out drawn liquidity, and sellers are stepping in. We have a fair value gap. It's pretty much one and done. All we need is the simple inverse right there, right? So what ends up happening here is, in the futures class, you guys can see that, yeah, eventually we ended up inversing this fair value gap. I went ahead and entered shorts right here. You guys see NQ shorts at 19,096.50, and long story short, we ended up hitting drawn liquidity just like that, and we took our take profit, right? Boom, just like that, and the trade was done. 50 points, and we're done, right? So that's one example, and I can show you guys a million more, which I will right now, so you guys can see in real time exactly how I found it and exactly how I traded it, right? So let me try to find one. Let me see, futures alert. Here's one, for example, right? So here, let me go ahead and pull this up. This was on the 26th, so it should be right here. Oh, let me see, 26. Okay, right here. So what can we take from, before I even read what I said? What I want you guys to kind of, of course you guys can't talk or anything because it's a stream, but I want you guys to look at this chart and pretty much see what can you take from this. Well, first of all, right, the market trend is pretty bullish. Why? Because the market found the bottom, right, and it's bouncing right back up. And wait, let me see. Can you show the most recent loss and where it went wrong too? Yeah, I will show that. But in this case, right, the market found the bottom and a lot of buying started coming in, creating these two levels of drawn liquidity below. So we have this one and we have this one right here, right? But you guys can see that there's a lot of buying coming in. Now, what did the market do before? You guys can see that, yeah, we have a fair value gap right here, but before we actually retrace into this fair value gap to bounce right back up into the drawn liquidity, what ended up happening is we actually took out the drawn liquidity right here, which is this high up here, right at 20,024, and the market rejected right back down before it hit the fair value gap. So in this case, what we're going to be looking for is shorts, because the price target or the drawn liquidity already got taken out, right? So in this case, since the drawn liquidity got taken out, we're going to be looking for a simple sell-off into these two levels down here, right? So how do we find the sell-off? Well, by simply looking for an inverse fair value gap based off this level right here. What ended up happening right after? Well, let me see right here. What ended up happening right after is, if I scroll down, you guys can see that, yeah, we ended up getting the fair value gap break below. A lot, you guys see, drawn liquidity followed up with a lot of selling, and all this stuff, right? So in this case, what ended up happening is, yeah, we ended up hitting drawn liquidity, well, at least our first one at 19,941, and that was a trade one and done for about 45 points, right? And I promise you guys, I can go on and on for days. We ended up going on about a 2-month winning streak. There are some L's here and there, but we made it back fairly quick. But yeah, literally trading this exact model, we went we went on about a 2-month winning streak with barely any, I promise you guys, like 2 losses, right? And these losses were extremely small. Now, let me show you guys one fair value gap model. I showed you guys 2 inverse fair value gap models, so let me go ahead and show you guys exactly how a regular fair value gap would look like, right? So in this case, we ended up taking this trade on the 25th, right here. So let me go to my commentary channel and let me see where I broke it down. Right, and by the way, for those in my Discord or in my premium, for the commentary, for those that don't know, the commentary channel is where I give you guys my game plan of what I think the market will do, and of course my learning channel is where I enter and exit. Right, so in this case, the 25th, let me see, I think it was here. Let me see how the trade looked like. Okay, right here. Right, so on the 25th, I went ahead and told everyone, keeping an eye on NQ. And here's what I'm looking at, right? So right here, you guys can see that, yeah, the trend looks pretty bullish. There's a lot of buying coming in, and we do have this really bullish fair value gap right here, right? So how do we know if the market's going to keep going higher or keep going lower? Well, simply because we know exactly where drawn liquidity is, right? The market did have room to go a bit higher. So in this case, you guys can see right here, how much room the market have to go higher? Well, we had 19,998, and we also had 19,941. These two levels of liquidity, is where all the stop losses were placed at, right? So we do know what is bro's Discord from Profit Insider. Just click the link in the description. It will say learn from me, and in my Discord is right there. I need to take like a little break. Hold on. Do you fill orders on TradingView? No, I only do TraderVate. Okay, but anyways, in this case, right? So now that we know that the market went ahead and retraced into this bullish fair value gap, but we're not going to be inversing it because we know that the market has room to go higher. We have room to go to 19,898, and we have room to go to 941. Right, so what we're going to be looking for here is when we go ahead and retrace into this bullish fair value gap, we're going to be looking for a lot of buying to start coming in. Right, once we see that buying starts coming in, then we're going to be looking for a long position. So in this case, I went ahead and told everyone. Right, let me see right here. I went and told everyone, keeping an eye on this NQ setup, and here's exactly what I'm looking at. Looking at the 5-minute time frame after the 10 a.m. news came out, NQ created this strong 5-minute fair value gap. I'll be looking for a simple longing opportunity if NQ is able to retrace into it and show a lot of buying interest off the midpoint of the fair value gap. Why? Because I knew that the NQ had room to go higher into drawn liquidity above. Right? So I went ahead and gave the setup, and I told everyone keep it on watch just in case it does play out. Let me see. So you chart on TraderVate and place the trade? Yeah, I do. Glory. Yes, sir. Yes, sir. But yeah, in this case, you guys can see the exact setup before it played out. And what ended up happening is we ended up getting the retracement into it, and we started getting a lot of nice bounces off of this. Right? So what can we take from this? Well, if we haven't taken out drawn liquidity and we're bouncing off a bullish fair value gap, we definitely have room to go a lot higher. Right? So what we're going to do here is, of course, when we get the bounce, we're going to go ahead and enter. Right? I ended up entering at about 19,867. So I'm going to go ahead and place my stop loss at the most recent low, which is going to be this candle wick right here. Right? At 19,854. Right? That's going to be my stop loss. Why? Because that's where the market that's where the market bounced from most recently. Right? So right after we went ahead and entered, right? Long story short, we ended up hitting all of our price targets, right? You guys see our first price target got hit, we took profit there. Our second price target got hit at 941, we took complete profits there. Why? Because the market went ahead and took out all these stop losses, and now it has room to go lower, right? And I'm pretty sure what ended up happening right after is the market completely dumped, and the play was over. So that's pretty much how I found it using my inverse fair value gap and regular fair value gap model. I promise you guys, it's no strings attached. It's really this simple. Right, and now, in the meantime, if you guys have any questions in the chat, feel free to let me know. And I can help you guys out with whatever. Maybe you guys are confused with the fair value gap, drawn liquidity, or MSS. Do you mostly use 5-minute fair value gaps? Yes, sir. So the way I do it, and I really want you guys to write this down because I teach this to my premium all the time. If you guys really wanna, I'm not gonna say secrets, but the way I use my time frames is I use the 5 and 15-minute time frame to find my entries in the market, and I use the 1 hour and 4 hour time frame to use to find my bias in the market, right? So when I'm looking for 1 hour or 4 hour fair value gaps, I go ahead and use that as my bias, right? So if we're getting a bounce off the 1 hour, I'm gonna be bullish short term, right? So then once I find my bias on the 1 hour time frame, I'm gonna go over to my 5-minute time frame and find another fair value gap to base my entry off of, right? Do you have a PDF on both fair value gap strategies? Yes, sir. Here, let me go ahead and send it to you. It'll be right here. I really wish here PDF for fair value gaps and inverse fair value gaps. Okay, there it is. I went ahead and linked it. It will be super helpful to study, bro. I'm telling you, I'm gonna be doing these classes every single day. I did one on Friday, and I'm doing one today, and I'm gonna do one all week. Right? I'm gonna be doing this for like an hour or so, to teach you guys everything I know about trading. Do I ever trade options? I'm not gonna lie, options it's definitely against you. I just don't like how Greeks, how Theta messes your contracts up and all that stuff. I just don't like it. That's why I do futures full time. I pretty much make a living off trading futures. Can you show how to find a fair value gap once more? Yeah, I got you 100%. Or if anything, look, Kevin, go ahead and click on the link that I just sent for the PDF for the fair value gaps. There I pretty much teach everything. So if you guys click on the link right here, which I'm gonna go ahead and put right here, you guys can see that it says you're trading fair value gaps and trading inverse fair value gaps, right? So if you can go always click on this, finding the perfect fair value gap. I tell you guys all the time frames that you guys pretty much need, all the explanations behind it and all that good stuff, right? If I see a few fair value gaps, how do I decide a fair value gap? For me, I personally just use the most recent one. Don't overcomplicate it. Uh, you know, just for me, they pretty much all work. But I just use the most recent one. Does this fair value gap react like this on all stocks? I would say on more, yeah, like you said, big boys. Yeah, pretty much on like the bigger stocks for sure, like QQQ, SPY, Tesla, Nvidia, Microsoft. All those they work because all those are the ones that really move the market. You know what I mean? So they have all the volume. So of course, if there's a lot of volume in the candle, there's gonna be a lot of imbalances. Now, if you're trading something like Target or like a small cap stocks, you guys can't really decide on what's gonna happen there, right? It's pretty complicated because all the volume is all over the place, right? But if you guys are trading NQ, ES, Bitcoin, gold, I know a lot of you guys trade gold in here, Tesla, Nvidia, it all works there for sure. Let me see. Oh, what the fuck? That makes sense now. When I'm finding a 1 hour fair value gap, then I go down to the 5 minute to see how it reacts at that 1 hour fair value gap. I don't know. Yeah, no. So Fixian, I think that's your name. Pretty much the way I do it is if I find, let's say for example, I find a 1 hour fair value gap on the one, of course, on the 1 hour time frame. I'm gonna know that if we're bouncing off that bullish fair value gap on the 1 hour time frame, I know that short term the market is gonna be going up like crazy. So what I'm gonna do in this case is I'm gonna go over to the 5 minute time frame. Once I get the confirmed bounce off that 1 hour fair value gap, I'm gonna be waiting for a really nice imbalance to be created on the 5 minute time frame. Once it's created on the 5 minute time frame, I'm gonna be using that 5 minute time frame fair value gap to use it as my entry. I do not use the 1 hour nor the 4 hour time frame as my entry points. Why? Because of course, when you guys are talking about huge, like pretty much the 1 hour fair value gaps, you guys are talking about really big fair value gaps. Of course, you guys know on the higher time frames, they're gonna be about 10 times bigger than the 5 minute time frames. You know what I mean? So of course your stop loss is gonna be really big and it's just a mess. So what you can do in this case is simply go find your bias on the 1 hour time frame and take it from the 5 minute time frame. It's that simple, right? That's pretty much how I do it. Can we go over imbalances? Yeah, I got you. Or actually, if you want, Glory, just click on the link. Just click on the link. This link right here, once again, here it'll be this link right here. It pretty much shows you how to find imbalances and fair value gaps, right? But yeah, it's all here. So if we're trading small stocks, because we're using a smaller account, should we find them on different strats? I'm not gonna lie. Okay, if you guys have a small account, it does not mean you guys can't trade SPY or QQQ. If you guys are doing options, which I'm sure most of you guys in here are doing options, you guys can always what's it called? You guys can always go for out the money contracts, which go for like 20, 30, 50, 70, 80 dollars, and it'll work the same exact way. But if you're trading like something really small like Target or something, this strategy won't work. Because volume is all over the place with these small stocks, so it's just not something that'll work. But if you're trading SPY or QQQ, it will for sure work. Thanks, bro. That helped me a lot. I got you guys. I got you. And by the way, quick plug here. If you guys do, of course, want to learn more from me, feel free to click the link in the description. I have my free Discord there where I do these classes and recordings and all that stuff. Or you guys can always join the premium to get access to the alerts, which will be right here. You guys can always get access to the alerts, which would be like this. You guys can get access to the commentary. You guys can get access to the class recordings, literally to everything, right? So if you guys do want to join, it will be in the link in the description. Now let me keep answering some questions. Let me see. How do you set the time frames to stay up on the top left? What you do is you click on the arrow and then you just favorite them. So you can just click this favorite. You see how it moves? So just click the star, and then if you guys want it, just click the star, and it will come up here. And then these are my things. Apex or top step. Okay, I'm not gonna say 100% Apex. But I am more on Apex. Will you do live trading sessions in the premium every day? Yes, sir. I do them every single day. Yeah, I do. I do live trading in the premium, and I also do more classes like this in the premium. Just more premium focused. It just it lets me teach more people there. Let me see. But yeah, no, Top Step or Apex, okay, they both have their pros and cons. I use Apex. The reason I like Apex more is, of course, you guys know that Top Step, you guys can only request about 50% of your payouts for the first 30 days. With Apex, you guys can request about 90%, right? And with Top Step, it's only limited to 5 accounts. With Apex, it's limited to 20. Bro, yeah, a little bit. Nah, but that's how it is. But yeah, for me, I personally like Apex more, but they do have their pros and cons. One is better than the other, you know, in certain aspects. But for me, I prefer Apex. And by the way, if you guys do want to get some funded accounts for futures, click the link in my description. You guys can see my Apex prop firm, or not my Apex link to get 80% off. But yeah, Jez, I think that's your name, on Jez, something like that, right? Yeah, I do live trading in the premium every single day. If you guys do want to join, it'll be right here. Let me see. Affiliate? Yeah, bro, that's what's up. That's what's up. I don't think I could pin this. Here, let me go ahead and. There you go. But yeah, okay. Let me know if you guys have any more questions, and if not, you know, we can always call it a class for today. I feel like I taught you guys a lot of stuff. To the point where you guys are good, at least for the day. And if anything, I'll do another class tomorrow. So just let me know in the chat if you guys are good. If not, we can always call this a stream and come back tomorrow. Hopefully, tomorrow's market is a little bit better. I really hope. So I can teach you guys some more stuff real time. But if anything, I'll just stick to the topics and show you guys from the past, right? But if you guys do want to join the premium, feel free to click the link below. Yeah, call it a class. Have a good day. Sounds good. Alright guys, have a blessed day. I'll see you guys in tomorrow's class. Same stream, same everything. Make sure you guys subscribe to get the notification. And I'll see you guys tomorrow. Alright guys, take it easy guys. Peace out. Wait, let me see. Can I try out the premium for a month without paying? Honestly, bro, I don't do it like that, bro. First, 5 minutes learned already made 2K, bro. Do you do any free challenges for the premium? Okay, if you guys want, here before you guys leave, for those that are interested, here. Here it is. Hold on. There. So guys, use code trial for your first month, and there'll be a discount. There'll be a discount there. So if you guys do want access to it, use code trial, and something will come up. All right. All right, guys. Take it easy. I'll see you guys tomorrow. Peace out.